Everybody, we're going to get started after the lunch break. I'm Steve Simchak with the American Insurance Association. Though as Jenny Leonard dubbed me at the end of the last panel, I go by the internet screen name TISA Fanatic. No, that's not true. But welcome back. Hope everybody enjoyed your dessert. And on social media, though, on that topic, I'd just like to remind anyone out there who's hip to all the latest gadgets that please tweet today using the hashtag CSI 2018 Summit. So up next, we have a terrific panel on China. And with that, I will hand it over to our moderator, Claire Reade.
Thank you, Steve, and thank you, everyone. The structure for our next 49 minutes is going to be that I'm going to give a little bit of a kind of stage setting so that there are certain issues that we can start from as premises unless the panel disagrees with me. Then what I'm going to do is introduce the panel and throw questions to them, and I'll throw a question to a particular person just to start the conversation going, and then ask any of the other panelists to react if they have something that they'd like to add or to challenge or otherwise deal with. And I will tell you that this group of gentle people is really fine group for listening to insights about China. So let me start by saying I think there is a widening awareness that the U.S.-China trade and investment relationship and environment could be experiencing something that's more like a paradigm shift than just a temporary dust storm between President Trump and Chinese President Xi. And I think it's very important to look at this complex relationship with nuance, not creating stereotypes, but rather assessing the dynamics that exist now with subtlety, because I think that's needed to help business cope with and adjust to what the realities are. And that's what the great panel here is going to try to do. So now, setting the stage with a couple of things that I think are more or less accepted, I think the U.S. hopes that China would move towards a liberal market economy dropped sharply in recent years to the extent that one held them, and that we would have had and seen a more insistent and sharper China policy, regardless of who won the 2016 elections. I also think that China's policies have too great an impact globally to ignore them, even if they are similar in kind to the kinds of policies that cause us trouble with our other trading partners. I also think its internal market is so large and hugely attractive to business, and that's another reality that has to be taken into account. Now, Trump has initiated a disruptive and very public conversation calling out China on its problematic industrial policies and on its strong efforts, which it made remarkably public, to actually prefer its domestic companies over foreign-owned competitors. Trump's administration also has now flagged the broader strategic power competition with China and for global political and military influence. And Trump's tariffs are producing what some hope to be temporary disruptions in supply chains and in U.S. business investment planning. It's not clear how temporary they are, of course. Congressional legislation has created permanent changes, both in our foreign investment restrictions and now in our export controls, which are going to have a major impact potentially on technology collaboration and exchanges and investment and other related activities. Sanctions, arrests, visa restrictions, and other actions involving China are more public and do create further signals of potentially fundamental change in the U.S. attitude, more willing to tolerate friction with China and more willing to call out its actions. At the same time, there may be a split in the Trump advisors' views, with some wanting to sharply reduce the U.S. dependency on China economically and get a permanent shift potentially in supply chains, while others may want China's reform, but may view outright hostility and any effort to try to segregate the two economies as both unrealistic and bad for the U.S. economy. and they don't believe that you can change some of these global economic realities. So the China mindset's also very important. It's imperative for Xi Jinping to resist any U.S. bullying, and China is not desperately dependent economically on the United States, so there are limits to the U.S. leverage. So what now? What is going to happen? Where will the trade war go? Will it escalate? Will it hit services? And what about the longer term? I'm going to introduce our panelists, and then we'll get to that question. So let me start alphabetically. Craig Allen, now president of the U.S.-China Business Council with a long, distinguished international career at the Commerce Department, many years in China, and work in D.C. on China trade and investment matters with me. And most recently, he was ambassador to Brunei. Charles Freeman, at the other end, now senior vice president for Asia at the U.S. Chamber of Commerce, but I say he's done almost everything. Been in private practice as a lawyer, worked in private business, worked as the China chair at CSIS. And then Scott Kennedy, right there in the beautiful blue tie, who is at CSIS, where he leads key programs on China economic and business matters. He's a renowned political scientist who is highly regarded, a former professor, and has many publications to his name. Finally, Eli Ratner, who is a political science as well, the executive vice president and director of studies at the Center for a New American Security, was a deputy national security advisor to Vice President Biden, also has experience at the State Department and at the Senate Foreign Relations Committee. So we have a great, great group. All right, Eli, let me start with you. Taking out your crystal ball, what do you see as the likely environment for U.S.-China economic relations in the next 12 months and then in the next 5 years?
Okay, well, great. Thank you, Claire, and it's great to be here. I thought your laydown of the internal debates and the situation were quite accurate. I'm probably going to have the most negative assessment of the group up here, so I was hoping to go last rather than first. Should have started with the more positive folks here. But I think the description of what you do, let me just frame, I'm going to do this quickly, but let me widen the lens a little bit, because the change in paradigm that you described on the economic front, where there was a set of expectations about the direction Beijing was heading, an alternative reality, and the likely reaction to that is true across almost every dimension of China's rise and the U.S.-China relationship. So it's not just in the economic sphere, it's also in the governance sphere, it's in the ideological sphere, it's certainly in the security sphere. And so the turn that we're seeing on economics is not only happening there, it's happening in the entire relationship. And I think it was very predictable and likely to continue. And I view the zigs and zags of the Trump administration, will he, won't he, as largely irrelevant in a very predictable trajectory to a much more competitive U.S.-China relationship. So I don't think that I know folks in the room want to know, are we going to 25% in January or not? That's a coin toss given where the president is on any given day, and we can talk about what the variables will be there. But I think the overall trajectory is much more competitive. I do not think there's a grand bargain that makes this whole thing go away. And there's political reasons for that as well as structural.
Thank you. Others? Views? Craig? No?
Fine. No, look, I mean, I don't think that it's hard to argue with that trajectory, given where we are. And, the Chinese expressed shock at Trump's sudden, the policies coming out of the Trump administration. But the reality is that this has been a long, slow burn towards this boil. And it's hard to see how we step down from this without some sort of radical compromise on both sides.
Anything to add, Scott?
I mean, certainly from the perspective of Beijing and Washington, the relationship is souring, and I would agree that the long-term trajectory is in a much more competitive way. I think the debate is about what's the construction of that competition, and what type of cooperation can you have within that kind of context that is still permissible. And I think that we don't know exactly what that construction is going to look like. And the biggest challenge right now is just the uncertainty of it. And I think that's what's driving companies crazy, that they don't know exactly where to go. In the meantime, while we've got all this uncertainty between the two capitals and companies are trying to figure out what to do and thinking about realigning supply chains, Two economies are actually growing well. Both economies growing fast, low unemployment, low inflation, so which is actually providing the economic space for us to figure out politically how to reconfigure this relationship.
Yeah, I'd like to thank Scott for bringing it back to the economics. I think on the economic side, most of the problems articulated by the administration can be dealt with. And indeed, the Chinese have suggested that they would be happy to make bold reforms, that they're planning to make bold reforms in the not distant future. So to the extent that this is an economic or a trade debate, I think that we could get to yes. To the extent that it is a strategic or a military or a security debate, it's more difficult. And when you toss everything together and mix it all up, perhaps it becomes impossible. But the problem in front of us, I believe, is an economic and a trade problem. And the two presidents will have the opportunity to meet in November. And I think with concerted effort and goodwill on both sides, and that does exist in many places, that we can get to yes, and that we can, if not resolve all the issues, then at least address many of them.
I should say, that you can look at this as a glass half full or glass half empty. And for those of us that work for member organizations, a lot of our members at the U.S. Chamber, they're doing quite well in China. Business is pretty good. There are challenges, yes, and there are frustrations, significantly so. But by and large, there is a will to accomplish some things. And it's hard when you're sitting in the White House or sitting in Zhongnanhai to kind of look at all these challenges and say, well, there's no silver lining on any of these clouds, but there actually is. I mean, there is a lot of positive stuff that's going on between member companies of U.S. China Business Council as well as the Chamber, and there are bases for finding a pathway forward.
Were you going to say something, Eli?
Yeah, well, just to reiterate something you said in your opening, which is that until recently, I think there was the dominant perception in the media and otherwise that the tariffs were about building leverage to make this deal. And as you described, I think there are increasingly, and it's not just on the security side, there are people who work on economic policy that are advocating these arguments as well, which is essentially that interdependence and excessive interdependence is the problem to be solved, and the tariffs are the solution to not completely disentangle. People use the Cold War, sort of this ridiculous caricature, how are we going to tear apart the global economy? Not that, but a little bit of decoupling, as it's called, to reduce particular areas of security and economic vulnerability related to technology and elsewhere. And in that world, the tariffs and the export controls and the investment restrictions are not leveraged to exact pressure to get a deal. They are the end point to produce a little bit of less interdependence, and therefore the end goal is exactly not to put down barriers and have our economies thrust back very closely again. So that's not the end point they're looking for. So the debate, those are obviously represent different factions within the administration, and we were talking a little bit earlier about where the balance is within that debate, but I think that sense of decoupling is probably the dominant consideration within the White House right now versus the how do we get a deal that reduces market access problems and et cetera, that some of the businesses would probably prefer.
Yeah, so I do think that we've heard strains in the White House on both sides
Right.
of that debate, and it's sort of. Let me turn to China for a minute. So, Craig, let's just start with you. Do you think the Trump administration is accurately assessing its leverage with China, and do you think it understands China's mindset and approach to these problems?
So I just returned from Beijing and received many lectures on this subject by the Chinese. I think that there are terrible miscalculations on both sides, and that the U.S. side has characterized the Chinese hand as weak, and it's not at all. The Chinese economy is doing well. It had 6.7% growth last year, will certainly be more than 6% this year. The tariffs are being felt and the uncertainty is being felt, but the Chinese economy is strong. The Chinese are also positioning their economy for protracted conflict. They've reduced the reserve rate that the banks are required to hold significantly, flooding the economy with cash. They are stepping up fiscal spending. They have stopped the deleveraging program. And at the same time, they're selectively liberalizing their markets, giving our European and Japanese friends advantages that American firms will not take advantage of. So the Chinese side is certainly calm, cool, and collected and ready to make a deal or ready for a divorce. Eli used the term decoupling. I would be very, very concerned about the implications of decoupling, at least in my view. Decoupling will lead to enormous consequences at the microeconomic side. I would argue the macroeconomic elements of decoupling, including potential financial instability in emerging markets, would be severe. And what are the next steps after decoupling? How do you get out of that? And aren't companies the best people to determine their own supply chains? Respectfully, managed trade is not what this country is about.
Others have a view on the China mindset and assessing?
Yeah, I mean, those of us that have spent a lot of time with Chinese officials have heard, for the last year or so, have heard a quote from Sun Tzu's Art of War over and over, which is, know your enemy, know yourself, and you will not be defeated in 100 battles. And the Chinese have a feeling that they know us better than we know them, and they know themselves better than we know ourselves. I think there's an element of overassuredness with the fact that democracies have inherent faults, and our ability, or the administration's ability, to wait out the political cycle here is much less than theirs. So you do see a lot of attention to the midterms and the impact on the political process here and how that will affect the trade issue. What we say is, look, it's either not going to change or it's not going to change. So the reality is that that's not as big a factor, and you probably want to have some more forward planning and get to know us better than a little bit better.
Yeah, that's a hugely important point, because I think one of the questions in Beijing has been how much of this is Trump specific, and I think the determination at the beginning was a lot, and I think there's growing recognition that it's not all about Trump, but I think they're still holding on to that and thinking, can they make a deal? And to exactly this point, I mean, the support, what I like to say is on almost every foreign policy issue, the entire foreign policy establishment is trying to pull President Trump backward, right, on the Iran deal, on the climate, on NATO, on NAFTA even. And China's the one issue where the entire establishment is pushing him forward, not the entire, but the majority of it is. And I think it's an interesting point, because I think on Capitol Hill, support for what's happening here is broadly bipartisan. And I think if Trump takes his feet off the gas in any meaningful way, his political opponent next time around is going to be outflanking him on this issue for sure. So I think, again, the political context matters a lot here. The idea if Trump gets spanked in the midterm elections, this is all going to go away, or if we can just make it past 2020, it's going to be a different political environment. I think it's a fantasy.
Go ahead, Scott.
From the people I talk to in Beijing and going to other parts of the country, it seems to me that the discussion in China is divided in people's brains amongst the same human being quite often, where people think, how on earth could Trump be acting this way and making these kind of crazy demands? And he's trying to solve America's problems and using us as a scapegoat, and need to find a new enemy because the Cold War's over, need somebody else. And this is 100% America's fault, 0% China's fault. The previous pattern of strategic patience and integration, that's where we need to go back to because of the positive sum nature of the relationship. On the other hand, Chinese having a domestic conversation where we're not in the room and they're not talking about us will say, we've got a financial system that's very inefficient, we've got big leverage problems, debt problems, aging population, middle income trap challenges, legitimacy challenges, problems in Xinjiang and Hong Kong and the Taiwan thing. Geez, we really need to fix this system. So on the one hand, when they have a conversation with us, it's like, it's 100% your fault. On the other hand, when they have an internal conversation, they point to problems, which are the same problems we're pointing to. But because it's seen through the lens of the bilateral relationship, they feel like that's not the context in which to address these things. So the question is, can you get a conversation with them, which is less about us and more about just them and the issues that need to. And if they did that, they might want to do some things, even despite the fact that Trump might want them to do it.
And I think the analytical question, I'd be interested, I know you're moderating, but I'd be interested in the response from these guys and Claire, from you as well. I mean, we talk a lot about, once the tariffs start hitting the farmers, it's going to change the politics in the United States. You do wonder if in next spring, next summer, the effect of the trade war starts really affecting the Chinese economy. How does that change both the domestic politics? How does it change their approach to the United States? How does it affect their foreign policy? And I think you could argue it round or flat, but it's likely to be an inflection point, as it would be here, if we start feeling real economic effects of this.
Yeah, well, I mean, I do think that this conversation has sort of demonstrated the importance of political and policy set of developments and policies going forward, where when they are mixed together, you can sometimes lose the opportunity to actually get a strand of it moving in a decent direction. And so one of the things that I would hope is that we can actually walk and chew gum at the same time with some of these policies, in terms of not just ignoring the economic realities that exist for both sides. Frankly, my personal view would be that the political pressures in a democracy are harder to resist than whatever political pressures that she has. But that's it. Let me just move to another question, which would be, Scott, let's start with you. If the trade tensions do continue to ratchet up, you've got more tariffs on Chinese goods, we go with the other $267 billion, or you up the 10% tariffs to 25 in January. What additional actions do you see China potentially taking in the short term? Would they raise their own tariffs on the goods they've got? Would they hit U.S. services? Anything else? And what would happen to supply chains at that point?
Sure. Well, right now the Chinese have tariffs on penalizing tariffs on 110 billion, equivalent of 110 billion of American goods, which is about 85% of American exports to China. That last 25 billion, I think that's essentially Boeing aircraft, which they really want and don't want to put tariffs on. So I think because they have a growing airline industry, they're unable to make their own aircraft, they don't want to stop that. So their choices are not to go there, most likely increase the level of those tariffs on the 110 on the other things that they could do without or find alternative suppliers for, and then make life harder for American companies in China. Anti-monopoly investigations, holding stuff up at customs, other types of tax authorities to do audits, all of those lovely kind of things that the Chinese they've done to South Korea and the Philippines and Norway and others. They're very creative. Beyond that, the Chinese could be more resistant in the non-economic space. I don't think they're going to, Xi Jinping is going to set some deadline on Taiwan and try and fundamentally change things there, but they're not going to be as helpful. South China Sea, the Korean Peninsula, the Middle East. There's a variety of ways that this could show itself. In terms of what the supply chain reaction is going to be, I think you're probably going to, if this continues, assuming it continues, I think sort of four kinds of outcomes. There's those companies that sell shampoo, diapers, sneakers, basic stuff, consumer goods, no strategic significance, perhaps except for clean hair, which is really important in meetings. But for the most part, these things will go untouched, and they will just be able to operate in and out of China, and they will make choices on where to have their supply chains based on the sort of the basic economics of cost and connectivity to others. Then I think you're going to see some companies which are doing things which aren't necessarily dual use, but they're much more significant types of products. And for those companies but not banned, right? They're not coming up in the conversation here in that regard. They're splitting their supply chains into two. For the China market, investing more in China to build for China, and taking their non-China supply chain stuff all out of China. And then I think third are those who are selling stuff that could potentially run up against export controls or import restrictions, and they're really not sure, and they're just going to leave China at some point, and their partners may go with them. Then lastly will be those who leave China but still can sell to China, but they'll do it from third markets. My sense is that there's been, the surveys from different industry associations have shown modest uptick in some of this movement. I think companies are looking to the G20 the end of this year to see, does there look like there's a pathway to at least, if not end hostilities, but cessation of freezing increase. And if not, then I think you're going to see C-suites make more decisions, which will put people in one of these four baskets.
Interesting, just an interesting observation on that. For services industries, they'll potentially be following, right? So the supply chain shifts will have new demands for services industries to think through how they then structure their products, as it were.
But also for this audience in particular, some of the unilateral liberalizations that are going on in services in China will not be applied to the American companies, which obviously has a major impact.
Yeah, go ahead.
Let us not underestimate the power of Chinese nationalism for the 1.4 billion, 20% of the world's population here. And we've approached this in a manner that's very deliberately provocative, and indeed the Chinese would find, in many cases, insulting, and making it more difficult to come to an agreement. Now, if the problems are structural, if tariffs are the means to an end, and the end is reform of the Chinese economy, then we got to be able to get to yes. Now, if the tariffs are the end in themselves, and we're happy for a decoupling of the Chinese economy, from the U.S. economy, we got to think that through. Because the implications of that are profound. They're profound not only for the companies in this room, they are profound for the customers in this room. Not only that, they're profound for the whole economic architecture of Asia and the political architecture of Asia. If you were to ask Southeast Asian countries, or perhaps others, to choose between the United States and America, and that's where the United States and China, and that's kind of where we're going, you might not like the answer. Why are we forcing them to choose? Is decoupling really a reasonable solution? And I will argue that it's not, and that there are other options available by which the United States can better protect its interests. And negotiating with the Chinese on our very valid concerns, and as Scott noted, they have a will to address those concerns in their own interest. The issue for them is timing. They do not wish to be rushed, they do not wish to be compelled, but they know that they need to make the changes that we have suggested so that they're able to get out of the middle income trap. Can't we get to yes for our own interest?
Can I just respond to that quickly?
Let me just make one two-finger, and then you can do it, which is, Craig, you and I sat at the table with the Chinese many times when they said that they just needed more time, and we just needed to be patient, and they just needed to do it their way, and then they just would give us a piece of a piece, and we would not be happy at all. And we were not willing to be patient after a certain period of time. So we have to be careful not to take at face value the statements that have been made when we've not gotten the results. So there's a middle ground here.
Not only that, it was a little bit of a caricature to say, we're going to make countries choose. The concept of decoupling, huge spectrum, okay? And we've already have export controls, right? Those already exist. We already have agreed upon level of decoupling they want. Beijing as well has policies, market access policies, that are predicated on concepts of decoupling, not wanting more interdependence. And so there are people who are, I think the debate needs to be, can you do that in a responsible way around issues that we can agree on, where there actually are certain vulnerabilities that we want to deal with. I don't think we get there by caricaturing decoupling as the extreme version that's going to tear apart the economy. There are limited versions of this, like FIRMA and export controls and otherwise, that I think most folks actually think are a good idea.
Maybe it's a word choice, because I don't think anybody up here believes that you can balkanize the two economies. The global realities are there, and I don't think we can.
It's a moniker for reducing interdependence.
Yeah. Others? Any other views? No. Okay. Charles, how would you get people to the table to make a deal if there was a deal to be made? What would a realistic...
All join hands.
What would a realistic deal look like?
I work for the world's largest business organization. We have 3 million members. It's an awful lot harder to get people to say what they're for than what they're against. So we're against tariffs, and we're for a deal, but exactly what the contours of that deal are is very difficult. Clearly, from the perspective of the U.S. business community at large, we think that building bridges with like-minded economies that have the desired goal of either on a multilateral basis convincing China to change the structure of its economy that create dislocations in the global economy, and or when necessary building quarantines around the dislocative effects of Chinese policies. Getting out of TPP is perhaps not the way to do that. I'm not sure a trade strategy which emphasizes purely bilateral agreements over multilateral agreements is the way you get there. I think all of us at this table would say, having had the experience, that Chinese respond much more readily to multilateral pressure than to unilateral or bilateral pressure. So I do think, part of this is it's a bit of a bet by the Trump administration that the pain that they can cause China through a proactive tariff strategy, and the pain that they can cause, particularly for some of the vulnerable parts of the Chinese economy, the ones that are low margin, export driven, that will create some sort of challenges to which the Chinese government has to respond. The business community, as we sort of talk about decoupling or anything else, the business community at large has gotten used to 60-some years of U.S. trade policy that emphasizes market access and emphasizes putting U.S. companies on the front lines, and having U.S. companies be ambassadors for the American way, without getting too weird. But this administration seems to be reverting to a pre-1945 approach to trade, which looks at a much more protected domestic environment. We've gotten used to this idea that free trade is embedded in the American way of doing things. For most of our history, we were highly protected. Abraham Lincoln said, show me a strong protective tariff and I'll show you how to build a great country. So, to the extent that we're returning to some of this nativist nationalist approach to things, there is political support for that. The challenge, though, is our economy has grown quite successfully and far beyond the need for these kinds of protective tariffs, particularly when they're being dreamt up in corners of the administration that are not connected with the way the economy is actually working. So I worry, that in this effort to strategically decouple, you make irrational economic decisions for legitimate strategic reasons that do much more damage than good.
Let me ask a question of anyone on the panel. Feel free to chime in on the question of whether, if we think about the audience out here, ICT services and financial services will be top kinds of services that would be of interest. Is there a prospect for getting a deal on those services with China, particularly given the kinds of cybersecurity law and these other national security sensitivities that they have described, sort of the obverse of what I will call them the China hawks have described as a national security concern for the U.S.? What are the prospects? Any thoughts on that?
Yeah.
Yeah, go ahead, Scott.
I'd say in terms of financial services, lifting ownership caps if they started to do in traditional types of financial services, online banking and things like that, things that Alipay, replicating that I think is probably really unlikely. But I think the Chinese have shown that this isn't going to fundamentally change industrial policy if they make those type of market openings. Those are the types of things they can do. On the ICT services, I don't think there's any reason why they couldn't lower the Great Firewall for e-commerce without and doing zero harm to national security. There's really I can't think of an argument why someone who's sitting in Xi'an can't go to Amazon.com and buy something as a grave threat to the Chinese nation. But maybe reading some newspapers or something. I could see how they make that argument, even though I don't think it's true at all. Cloud services probably a bigger challenge. But again, I think traditional commercial cloud services is really I would argue no big deal. At the moment, that seems to be in the no basket for them. I think you could have a really good argument why it ought to be in the yes basket. So I think there's ways to move market access on some of these things, but I think the Chinese, at the end of the day, want to basically keep the right to say on any specific thing at any time, if we decide it's in our national interests, we can stop this one thing. Because that's just the way the party operates.
Can I say that the administration has framed all this as a big bilateral issue, decoupling of the U.S. between China and the U.S. In fact, it's not a bilateral issue at all. It is properly framed as a multilateral issue. The Europeans and the Japanese face exactly the same problems in the service area that American companies face. And as the Chinese liberalize, and I would, to respond to your question, Claire, they're moving faster, certainly, in the financial services area than in electronic area, which gets closer to national security. But in the current environment, the Europeans and the Japanese are going to be benefiting from those liberalizations. Case in point, last week, BMW opened a SUV plant in Shenyang with 75% ownership. Those are the vehicles that were formerly exported from South Carolina. Now, I don't know who's benefiting from that, but it's not the people of South Carolina. And as we think about decoupling, as we think about causing each other pain, our European and our Japanese friends are going to be doing very well in the rapidly growing China market. The Chinese market will grow at roughly double the rate of the U.S. economy for the foreseeable future, and it's imperative that our companies are successful there. If our companies, the companies in this room, are not successful in the China market, how are you going to be successful in the global market? It's a sine qua non to be a global company, to be successful in the China market. These are important values worth fighting for.
Okay, with that, I think we're at a point where we are supposed to be asking for questions from the audience. And if that's correct, then I'm asking for questions from the audience. I don't even know what our approach is for doing this. Do people just stand up and randomly?
Got a microphone right there.
Microphone, okay.
Hi, Marilee, International Trade Today. Maybe this is best for Mr. Freeman, but I wanted to ask about the Bloomberg report about the hack of hardware with the microchips and how significant that might be for the trading relationship, if at all.
Without getting into the accuracy of the reporting or who's right and who's wrong, the report itself clearly is having a chilling effect, or will have a chilling effect on companies either sourcing from or building from that market. So, I don't know, Scott, if you've been paying closer attention to this than I. I mean, I've read it with interest, and I have no independent knowledge of who's right and who's wrong, and so, but it's certainly, the timing of it is pretty interesting.
I don't know any more than you on the specifics, and I would agree that it's having a chilling effect. I think we're going to see a whole variety of these kinds of reports that people are going to be pointing to try and justify why the U.S. needs to take a tougher approach towards China, arguing against the type of approach that I think Craig is suggesting would be a much more responsible approach. Whether or not those things are true or not, having that in the public realm as part of conversation is the kind of thing those people would like to.
Yeah, I think one of the interesting things, and Eli alluded to this, the role of the intelligence community and the defense establishment here in setting economic policy is at unprecedented levels. I mean, certainly when, I don't know, Claire and Craig, when you were in government, this you just didn't have conversation. You didn't hear from these guys. And now I think that there's a much more active role for them in setting econ policy.
Other questions? Yes.
Good afternoon. Dave Snyder, Property Casualty Insurers Association of America. I want to thank all of our experts. You've had so much to do with China in a positive way over the years, Claire especially. And so my question is this. We are financial services, so of course we have interest in financial services openings and free trade. The more commerce there is, the more insurance is needed. So it's just a win-win. We also have interest, though, as payers in the domestic market for things like automobiles and auto parts and commercial products. So do you have the sense that it's fully understood the impact of these tariffs on the typical American that will go far beyond just the manufacturing sector? And how do we get past this environment that we're in now to sort of reestablishing some sort of a win-win paradigm as opposed to a lose-lose paradigm? Thank you.
A small question, Dave.
As
usual, he hits right to the heart of things.
Dave, it's a fundamental question, and clearly Americans are hurting. I don't know the extent to which folks in this town understand the depth, but if they go to www.thewrongapproach.com, they can sample some of the real pain that individuals are having around this country and see the actual impact on communities of the tariffs themselves.
You know, I'll say something that's just my own speculation on this, which is that I think this is sort of an experiment that's going on. And I think there's a bit of trial and error that's happening. And I'm not sure what data or whatever are driving it, but I think the questions like 25% tariffs in January on a very large swath, much larger swath of goods than was affected by the first 34 and 11, will potentially make it more evident. It's really actually particularly concerning for me for the small businesses, because the small businesses often have no options. Large multinationals end up talking about writing something down or losing money in a quarter or not meeting their profit estimates, but the small companies can die because they don't have the money to be able to shift, and they don't have the sophistication, nor do they have the sophistication in terms of communication of their pain. So I do fear that as the casualties rise, that it's going to take a while for the United States political system to actually be aware of it, particularly if it's coming from the small guys.
Just one reaction to this. I mean, I don't think, at least I haven't seen sort of sophisticated modeling on exactly how that works. It's very complicated and at the micro level. I guess one question I would throw back would be, what about the previous status quo? Was that tolerable? I mean, was that benefiting the United States in the long term?
Or
I
the
think
trajectory of that going forward.
I mean, would it have better if the U.S. government had done nothing and the IPR theft had continued and the market access restrictions had continued? I mean, China's all of a sudden considering opening in certain areas, maybe some of that would have occurred otherwise. But was the deal that we had struck where our economy was completely open and theirs was increasingly shut, was that good for the long-term trajectory of the U.S. economy? Was the China shock that we experienced in the 2000s good for the American people? So I think we gotta, maybe we're not doing this the right way, but I think the sort of, I think the question is, what does a sophisticated competitive strategy with China look like? Not, these guys are basing their policies on completely unfounded ground. Everything was fine before. Let's just go back to business as usual.
And I guess my only point on that is that I think there's a little bit of improvisation going on right now.
Absolutely.
So that what you've got is
Oh, really?
is
thought
the
it was
fact
clearly
that
planned
it's perfectly planned out. Is that I think this desire and need for that sophisticated strategy where you decide where you need to quarantine, as Charles put it, and where you understand that the global realities of the economy, mean that, you don't really want to kill your own economy, in a way where others are going to be just walking in behind you and they get the benefit. That's not good either. So what do you do? Over to Craig.
We think that the president has been masterful at creating leverage, and that's great. So now is the time to resolve these issues. Now is a good time to address the real issues that you've referred to. But in the meantime, American companies are doing really well in China. Among our 210 members, some 98% are profitable, some 60 to 70% have profitability higher than global profitability, and most of those companies look at China as the future growth market, and those plans are being affected by the current political uncertainty. I'm with Adam Smith on this. Allow the markets to play their role. And government micromanagement of trade probably will not have a happy ending.
Scott.
Yeah, I definitely agree that our government should let the market play a role. I also think the Chinese government should let their market play a role. And I guess what I'm concerned about is not the welfare of any individual company, and I know American companies are competitive as anyone, and there's no surprise to me that they're doing well in China and elsewhere. But I am worried about the health of some of these industries, particularly in high tech. Overcapacity is a problem, cheapening of IP, abuse of data, things like this, which if China were a smaller country, you could take it or leave it. You could push really hard or not. It wouldn't make a big deal for those companies or the global economy. But I think as someone who, China's market distortions are global market distortions. And then the question is, if you agree with that, then you realize that patience alone wasn't going to be enough. You'd need to do something more than that. Then the question is, yes, our fumbling now towards a new strategy which says, China, we can't just have this go on forever, even though a lot of people have benefited because the cake is growing, but you want to have this be a healthy cake that is good for people.
Yeah, I just want to finish the thought. I appreciate Eli's point about, we couldn't just do nothing. Although I'll quibble with whether the China shock was as deeply difficult for the American people as you suggest. If you're referring to the Autor study, I got lots of data which disproves it. But fundamentally, the way to go about managing the problems is not to harm the American people and the American economy. And that's exactly what's going on. I couldn't agree with you more that we were due for a more aggressive or confrontational economic policy and arguably strategic policy with respect to China. But this process is undoing much of the good that has been done with the efforts to deregulate and to work on more reasonable policies and other economic policies, domestic policies. This is just undercutting a lot of the good work that the president has been trying to do. And so, with respect, the response to a difficult problem from the Chinese is not to shoot ourselves in the foot. And that's exactly what we're doing.
Okay, I think we have time for one last question, if I've got that right. No, I don't have time for one last question? Does that mean we're done? That means we're done, I'm told, and unfortunately, so we'll have to get the questions answered afterwards. Join me, please, in thanking our panel.